ಮಾತಾಡು. ಗೊತ್ತಾಗಿತ್ತಾ? ಗುಡ್. ಸೊ ಸ್ವಲ್ಪ ಸ್ವಲ್ಪ ಕನ್ನಡ ಮಾತಾಡೇಕು ಆಯ್ತು.
Good evening, Pradeep sir. We are on live, sir. Now onwards.
Yeah.
Just
Good.
now
Very
I was
good.
on live. That's why I.
Yeah. Wonderful.
Yeah.
Good evening, each one of you.
Good evening all.
Now,
Good evening
those
all.
who are already there, I can keep the session open for 5 minutes, because by the time participants will join,
Yeah,
anyone has got any one of the doubt on module A or module B, please welcome. Any question you have,
friends, one by
or
one,
any doubt you
please
have.
ask. One by one.
Okay, one by one you can ask me. Okay, either by unmuting or by putting into the chat, as you wish. Yeah. 5 minutes are still there, so you can make use of my presence before you for a period of 5 minutes, which you can utilize it in a very productive way. Yeah. Okay. If you do not have any doubt, then let me tell you how today's session will go. Difference between holder and holder in due course. Definitely, we are discussing in a negotiable instrument session that aspect with clarity. So good evening. Minimum credit rating required for commercial paper. Oh, good, no problem. Okay, commercial paper. Yesterday it was there, isn't it? And yesterday it was very clearly stated that at least triple A, okay, sorry, triple B rating, which is as per the approved SEBI credit rating model, that credit rating is required compulsorily. Okay, and triple B rating is a reasonably safe investment rating. Okay, then as far as holder and holder in due course concerned, to make you understand in a very simple way, a negotiable instrument, maybe a check, maybe a promissory note, or maybe a bill of exchange. When it is drawn in favor of somebody, there is a payee, and that payee, when he holds the instrument, or an endorsee when he holds an instrument which is already became due, which already due for payment, then the person who holds it is a holder. Means a person in his own name entitled to receive amount on that instrument from the drawer, from the drawee, is known as holder. Whereas in case of a negotiable instrument, when it is payable after some period of time, then during the course, the property in negotiable instrument can be transferred by way of endorsement. And when endorsements happens from one person to another person, there is an endorsee. An endorsee who receives instrument for consideration, and that too before its due date, then in that case, that endorsee is considered as holder in due course. And every holder in due course is a holder. That is what every holder is a holder in due course. That is what an assumption in section 108 of presumption of under Negotiable Instrument Act. When a stolen bearer check transferred to other person, whether that transferee can be holder. See, bearer check, please understand one thing. Bearer check is a bearer check, and that bearer means anyone who is carrying the check is entitled to receive the money. Okay, therefore, with regard to a check which is bearer, the concept of any instrument for that matter, any instrument which is bearer instrument, the concept of holder and holder in due course won't work. Okay, every holder is a holder in due course, and every person is a holder in due course, because with regard to check is not at all payable over a period of time. It is payable only on demand and after due date only. Okay, so with regard to check, this won't work at all. Any other question? Good, good. So, okay, a nice discussion we begin, and exactly at the dot 9 o'clock, we will start our session. Okay, that is dot 9 o'clock for me. For you, it is it seems
7:30.
7:30 in the evening. Okay.
Good evening, friends. Welcome to all.
Welcome to all for the almost last session for this particular subject, and therefore be attentive, be clear, be calm. Don't increase your confusions. Okay, you might have seen so many things at so many places, so let us not to get bothered about many aspects. Let us try focusing on this particular aspects of the module B. So the first slide, I don't think there is anything to be discussed. Okay, very, very simple thing. Definition of banking: accepting deposit of money from public for the purpose of lending or investment, and such deposits repayable on demand, withdrawable by check or draft or order or otherwise, is the definition under Section 5B of Banking Regulation Act. It in simple way, it can be treated as the banking business definition. Section 5B talks about what? Section 5B talks about the banking business. Okay. Section 5C is about the any organization which is engaged in this kind of business is a banking company. And a banking company will start working only after obtaining due license from Reserve Bank of India, because having a license is a compulsory requirement. Okay, without license from Reserve Bank of India to carry on banking business, no one can work as a bank, and only bank has got authority to manage the demand deposits which are payable by check or a withdrawal slip. Okay, so that demand deposit is the only right of the bank. No one else can manage the demand deposit. No one else other than the bank can issue a checkbook. Okay, so post office was exclusively allowed under a separate provision. Okay, now NBFC is a non-banking finance company, means all other activities which are there for a bank, such as accepting deposit, lending, investing, all that job they can do. But what job NBFC cannot do? NBFC cannot accept the demand deposit from the public. But if NBFC took a permission from Reserve Bank of India to accept deposits from public, then it can accept only a time deposit or term deposit. Now, these are all the various kind of businesses which bank carries. And not only this is very small list I have stated here. There are many more number of businesses bank carries. But if anyone has got any doubt with regard to any one of the things, you may raise the doubt. Otherwise, I'll just move. Okay, no issue. Bank is under compulsion to make use of the word bank, banker, banking company in their title. At the same time, no one other than an entity which is permitted to work as a bank should use the word bank, banker, banking company, like these kind of words to exhibit their kind of business. Okay. So this is what is all about the slide 1. Hope let me move further. Now, when bank comes, automatically there is a customer comes. A customer, where the customer is got defined, please make a note, PMLA 2002. PMLA 2002. PMLA stands for Prevention of Money Laundering Act. Prevention of Money Laundering Act 2002 defines a client. A client is what? A client for a reporting entity. A reporting entity may be a bank, maybe an NBFC, maybe a telephone company, or because under PMLA there are many reporting entities. For a reporting entity, who is a client? Who has got a transactions activity done on his own behalf, or he is carrying on someone's behalf. He is a client, maybe an individual, a firm, a company, or an HUF, a society, or a government department. Okay, so these are all called as clients. And from here, Reserve Bank of India derived the word and it gave definition under KYC AML guidelines. So where the customer got defined? Customer defined under PMLA and KYC, PML and KYC guidelines issued by Reserve Bank of India. Okay, a person who has a bank account in his name and for whom the banker undertakes to provide the facility as a banker is to be considered as customer. Okay, once you understood the customer and the bank, then next automatically the how a person can become a customer. Here I have just stated you 7-8 important points. Under KYC AML CFT, if you have any specific doubt, you may ask. But let me tell you, these guidelines are issued by Reserve Bank of India, correct? Based on the guidelines issued by Reserve Bank of India, every bank need to frame their own KYC policy. And this KYC policy has to be on 4 pillars. Which are all those pillars? Customer acceptance policy, customer identification procedure, customer acceptance policy, customer identification procedure, risk management, and monitoring of transaction. So customer acceptance policy, risk management, customer identification procedure, and monitoring of transaction. These are the 4 pillars of KYC. Whereas within these works, there are customer due diligence is a word, risk categorization is a term, risk review is a term. So let me clarify one by one very quickly. Customer due diligence is while accepting the customer, the minimum amount of care depending upon the risk involved in the customer to carry on is known as due diligence. So merely not depending on the documents, but also verifying the details with the original, getting confirmation by some third party, making a visit and confirming the activity is known as due diligence, customer due diligence. This customer due diligence may be 2 types. One is a simple one, second one is an enhanced one. Simple due diligence is nothing but verifying the documents with original, whereas enhanced due diligence is the due diligence which is done by additional activities such as interviewing the client as well as visiting the client. Okay, so that is enhanced due diligence, and enhanced due diligence is required with regard to a firm, company, okay, a trust. Okay, so this is what. Now secondly, walk-in customer. Walk-in customer is a person who is not having any bank business account, but he is coming to the branch for the purpose of making his one-off activity to be done is known as walk-in customer. Okay, and there is another also aspect is there, the term called as a beneficial owner. What is that? BO. Because KYC is required with regard to the beneficial owner also. For example, in a partnership firm, there are 3 partners. One partner is having 35%, another partner is having 45%, whereas third partner is having 20%. Now, as far as this concern, it is stated that a partner, if he is having more than 15% stake in the business, then compulsorily individual also KYC compulsory need to be carried out. But there are 50 partners are allowed, and a partner may be having hardly a stake of 1%, 2%, then in that case, no need to carry on the due diligence with regard to that partner. Okay, so this is what is called as beneficial owner concept. Okay, with regard to risk categorization, all customers need to be categorized on the basis of the risk which is carried. What is the risk? Risk is on the basis of the origin of cash in the hands of customer, from where the money is coming into the account. Whether it is easily ascertainable, then low risk. If it is difficult to ascertain, then it is high risk. As such, salaried people, housewives, small businessmen, okay, student, they come under the low risk. Whereas a trust and NGO, they come under the high risk. NRI, they come under the high risk, whereas the businesses which carry the cash as well as the non-cash transactions in a mixed manner, they carry the medium risk. So high risk, low risk, and medium risk. Likewise, accounts need to be risk categorized, and this risk categorization need to be reviewed once in a 6 month. And after the end of a specific period, the KYC need to be complied with regard to these category-based people. That is known as re-KYC. Re-KYC with regard to high-risk people once in a 2 years. Medium risk once in a 8 years. Low risk once in a 10 years. So that's what is a re-KYC. In case re-KYC could not be completed by the client within the specified period of time, then account is subjected to partial freezing. And even after partial freezing means no debits are allowed. Okay. And after that also, if the customer is not doing the KYC compliance, then it is a full freezing of the account. Okay. So in simple words, deactivating the account. Okay, clear? So these are all the about re-KYC risk categorization. Now next term comes is a OVD. OVD means what? The documents which you are supposed to obtain to ascertain the identity of the customer. And there are two types of documents which are prescribed under KYC ML guidelines. One set called for the identification of the customer. Second is to ascertain the residence proof or address. Okay, to identify the residence. Okay, there are two different documents are prescribed. However, if the same document has got means both the features, then no need to insist for other document. For example, my Aadhaar is having an address which I am supposed to keep on my account opening form, then I need not have to give any other document to prove my residence. Okay. So now next is, which are all those documents under OVD? First is a Aadhaar. Second one is a driving license. Third one is a passport. Fourth one is a voter ID. Then fifth one is a National Population Record Registry. And last sixth one is a Mahatma Gandhi National Rural Employment Guarantee Program. Officials are issuing identity card to the people who are working as a labor, that is Manarega card. So these are only the 6 documents which are considered as OVD. PAN is a compulsory document. PAN is not a OVD. Okay, I hope this point is got clear. Okay, so now all these aspects are now over. With regard to a person who is unable to give any OVD for account opening, for such person also bank cannot deny the account, and for such people Reserve Bank of India provided norms to open an account, and under that category, if the account gets opened, that account is known as small account, and the small account has got certain limitations. Which are all those limitations? A maximum balance at any point of time can go only 50,000. Total credits in the account during the 1 year cannot go more than 1 lakh. Not more than 10,000 per month are allowed to be withdrawn. So these are the 3 basic conditions given, and a small account is opened. This account is opened for 12 months. Okay. And then within 12 months, the person has to submit the OVD. Then automatically account gets converted into a normal account. Okay. And in case the customer is not able to provide, but he is giving a proof that he already initiated for obtaining OVD, the another 12 months it can be extended. Okay. So now with regard to these things, I wish that you please visit my video lecture, which is available on the IBS YouTube channel. It is a 10-12 minutes lecture. It covers all the aspects of KYC. Okay. Which are all the 3 stages of money laundering? Placement, layering, and integration. What is FATCA? Foreign Account Tax Compliance Act. Common reporting standards. this under this FATCA, we are under obligation to report about the US US residing people from India who have opened a bank account to US authorities. Okay, ration card is not a OVD at all. It won't work for any purpose. Okay, good questions. Now, okay, I request you, please visit the YouTube channel of IBS. There, my video lecture is there on KYC, which already being viewed by more than 60,000 people. You may also watch it. Or anyone wanted to know anything which is there here, please ask. Quick. These are the 12 important aspects of KYC.
Unmute and ask.
Unmute and quickly ask.
FATF means comes under PML Act 2002 like that.
No, FATF is a Financial Action Task Force. It is not at all under PMLA. FATF is an international body. FATF is an international organization which is taking care of the internationally, means for all the countries, guidelines which are required to be implemented in respective country, that are being framed and provided to respective country. From there only the guidelines comes, and based on the guidelines which are received at the FIU-IND, Financial Intelligence Unit India, they circulate it to the central bank of country, that is the Reserve Bank, and then Reserve Bank of India incorporates them into KYC AML guidelines. Okay, good. Any question? Okay, now very important part for the exam is this CKYCR. CKYCR is Central KYC Record Registry. Central KYC Record Registry, Central Registry of Securitization and Asset Reconstruction, that is the CERSAI. CERSAI manages CKYCR. What is CKYCR? CKYCR is an organization which is now all the KYC details are being digitized and under the record, under the control of this CKYCR. So now onwards, any customer, if he wants to open a bank account or apply for a mutual fund, he need not have to give any documents, because a person now who opening a bank account, he is automatically getting a 14-digit CKYCR number. This number itself is more than sufficient for opening another bank account or obtaining any other financial service. So for that purpose only CKYCR. So no need to insist upon customer to provide any document once his KYC details are already there with Central KYC Record Registry. Now, an account which is opened on the basis of only Aadhaar, and that too remotely, for such a person, when eKYC is followed, okay, based on the Aadhaar number, where non-face-to-face mode means a customer is is there somewhere, bank is somewhere, account is opened by business correspondent. Now, such a way, when the customer is entertained, there are certain restrictions. Here, the aggregate balance in the account is not more than 1 lakh, because there is Aadhaar, but bank has not verified it. Okay, all credits in the account is up to 2 lakhs only allowed. And in case any loan is granted, that too only term loan can be granted to such a client, not more than 60,000. So these are the guidelines relating to eKYC opened account. And as you know that banks have already started opening account with video-based KYC. Video-based KYC is nothing but VCIP. Okay. Then small accounts I have already shared with you the details. Okay. Now, which are all the different type of customers you can see here? Hello? Different type of customers. Individual, joint individuals, minor, okay. Then partner, minor self-account, the illiterate, executor, administrator, trustee, agent, liquidator. And here on this side, a partnership, LLP, private limited, public limited, government company, one-person company, HUF, trust, SHG, JLG, and association. Anyone wanted to know anything in more about any one of the aspect? Okay, I'll share with regard to exam point of view. Okay, now, as far as account concerned, it will be opened only for a person who is a major having a sound mind. Major having a sound mind, such a person only account is opened. However, a minor is allowed to open an account in a two-way, that is either a self-operated account or otherwise account under the guardianship. Okay, means account will be in the joint names, natural guardian to operate. Okay, natural guardian to operate, or a testamentary guardian to operate, or a court-appointed guardian to operate. So likewise, a minor account can be there in two ways. If the minor is opening a bank account and operating himself, there are two conditions. One is he must have to be a 10-year-old, plus he must have to have ability to read and write and understand what he is doing. Then only a minor can open a bank account which can be operated by himself. A minor with a natural guardian account, the minor details will be obtained, and once he becomes the major, now he has to take a call whether to allow the natural guardian in his account or not. A minor cannot be a partner in a partnership firm. Minor cannot appoint an agent because he can't act as a principal. Even a principal will not appoint him as an agent because any contract with minor is a null and void. Minor cannot be a company director. Minor cannot be a trustee. Okay, minor can draw, issue, or endorse a check, but please note he doesn't have any liability with regard to a party to that particular check. So these are few things with regard to minor. Where the minor is defined in
Majority Act.
Indian Majority Act. Okay, Indian Majority Act. When it comes to the illiterate, we need, can transgender nomadic people open? Yeah, definitely. Why? I don't know why the issue. Okay, they are definitely permitted. See, whether Mr. Miss is our headache. As far as individual concern, he is an individual. He has got a contractual ability. He can enter into a contract. So they are permitted to open a bank account. Okay, an executor is a person whose name is stated in the will by a person. Okay, and after his death, that person supposed to operate the will. Operate the will means whatever the deceased person has stated in the will, he need to complete the job. In the process, there is a need to open a bank account. Then this person comes to the bank and opens a bank account. Then we call it as a executor. There is a possibility more than one executor also may be there. In case in a will, nothing is written by the deceased person, still will need to be implemented. Then in that case, there is a person appointed by the court. Then he is known as administrator. A will to get executable means operatable will need to be submitted in the court, and court once it approves, then it is called as a probate. For a person who is dying intestate, it means dying without any will, then all the legal heirs need to go to the court and obtain a certificate from the court with regard to how much will be the share of that respective person in the various properties of the person. That document is known as succession certificate. That document is known as succession certificate. In case the properties are unknown, they are inside the locker, and that need to be taken out, then in that case, the court will give a letter called the letter of administration. So these are the few things with regard to the terminology. Okay, agent. Who is an agent? Agent is a person appointed by somebody to act on his behalf. He is an agent. The person who is allowing is known as principal. Person who is working on someone's behalf is an agent. Liquidator is an authority appointed to liquidate a firm, liquidate a company, liquidate an organization. That is a liquidator. Okay. Pardanashin woman, why it is important? Because Pardanashin women are the people, are the women who are not supposed to be interacting with the society. They are away from the social activities, and as a result, any contract entered with the Pardanashin woman is likely to be voidable. And since the contract is voidable, bank need to be very careful while dealing with the Pardanashin woman. So identity of Pardhanasheen woman and the consent of Pardhanasheen woman need to be obtained after explaining her the consequences of that account. Okay, Shamshad, you want probate? Okay, probate is nothing. For example, I die and I have written a will. And in that will, I have stated that I have this much of money and this much of money in the bank account, this house, that property, this property. I want all this money to be brought together and to be distributed to a charitable organization this much, my elder son to get this much, my younger daughter to get this much. Like that, I have written. Now, who has to do the job? Someone need to do all these jobs, isn't it? That will, whatever I have prepared, that will has to go to the court. And in the court, they will make it open that we have received a will, and that will, whether it is a genuine will or not, unless and until it is confirmed, we cannot, anybody on that will cannot act. And therefore, will need to be verified by the court. And from the court, when it says it's okay, this is a correct will, then it is known as probate. Then it is known as probate. And the person executor will bring a probated will to the bank and ask the bank to open an account. Then such a person who is opening an account in the bank is known as executor. Executor for deceased person. Okay. Is it clear? Yeah. And with regard to partnership, LLP, let me tell very quickly, minimum and maximum partnership, Indian Partnership Act, minimum 2, maximum 50. Minimum 2, maximum 50. No need to get confused. There is no 10 for banking business and 20 for non-banking business. That's all gone. As per company law, actually it is 100. But the Government of India made a notification telling that only 50. So 2 minimum, maximum 50. Number 2, all the partners, once they are in a partnership firm, there is an agreement between them to carry on business on behalf of all, one by all and one for all. Means every partner is an agent to other partners, and every partner is a principal to other partners. So that's the way it works. And partnership is an agreement for doing the business and sharing the profit. Okay, sharing the profit. There is a possibility that a particular partner may not share the loss. Possible. Okay, because partnership definition is share the profit. Clear? Now, can a minor be the partner? No, minor cannot be the partner, but minor can be admitted for the benefits of partnership. And such a minor, when he is in the partnership benefits, then after 18 years, once he becomes major, he need to elect whether to continue as a partner, continue in the partnership firm as a partner or no. And if he has to decide within 6 months from his becoming major, or from his knowledge of becoming, from his knowledge, from the date of his knowledge to him to be, he was there in a partnership firm for benefits. Whichever is latter, from that period, 6 months time is given to decide whether to continue him as a partner or not. If he is silent, then he is regarded as a partner, and then he is liable right from his date of admission. This is what about the partnership. In a partnership, all partners are jointly and severally liable. As regards to LLP, here limited liability partnership means the partners are liable only to the extent of their contribution. Number 2, here minimum 2, maximum unlimited. Number 3, LLP compulsorily required to be registered with ROC, whereas partnership is registration is not compulsory. Partnership registration at all, if at all happens, it won't happen with ROC, it happens with registrar of firms. Registrar of firms. Okay. LLP is nothing but a corporate mode of a partnership firm. Okay. Then private limited company, minimum numbers are 2, minimum members are 2, maximum can be 200. What is the limited company? Limited company means independent person, entity status to that particular corporate, and the other people are only the members or shareholders. Minimum 2, maximum 200. Okay, minimum directors are required to be 2. Public limited company, minimum 7, maximum unlimited. Maximum unlimited. Government company is a company which is owned by the government of India, more than 51% ownership. Public limited company is a company where public can be invited to participate in the shareholding. Such a company is a public limited company. Private limited company cannot invite the share capital from public. Okay. And like proprietor, even a one-person company is also provided under the Companies Law 2013. So HUF is a body under Hindu law, and HUF is not at all allowed to be a partner in any partnership firm. Okay, because HUF itself is a combination of people, so therefore it is not allowed. HUF manages the business through the senior most person in the family, that is known as Karta. That is known as Karta. All other members are known as co-partners. Co-partners. Trust is someone's property managed by somebody for the benefit of someone. Okay, for the benefit of someone. So the people who manage is known as trustees. People who manage is known as trustees. Trustee derive the powers from trust deed. Trust deed. And therefore, bank, for everything relating to trust, bank need to depend on only a trust deed. Okay. SHG is a organization of how many people? 5 to 20. 5 to 20 members. Okay, so maximum 20 members are allowed in an SHG. And whether the only 20 people coming together, can it be called as SHG? No, SHG need to carry on other requirements, such as they must have to have a homogeneous group of people having at least 20. They must carry on the savings activity amongst themselves. They must also have the internal lending. They must conduct the meetings, regularly meet, and they also have to have a minimum number of records, sets, rules with them for the purpose of their functioning. Such a group is known as self-help group. And for a self-help group, there are so many advantages are given by the bank. For example, a loan of rupees 20 lakhs, up to 20 lakhs to an SHG in a rural area under NRLM is provided without any collateral security. JLG is a group of people of up to 5. It is a joint liability group. Associations are many. Hyderabad Cricket Association or the Hockey Association or Residents Association, all those are under associations. Okay. So I think I don't want to spend time unless and until you have any specific questions. Yeah, SHG 10 to 20, 5 to 20, anything more than 5, 6, because SHG of a disabled people can be only 5. Okay. Yes. What is that? You need clarification, Kavya? Cannot be a partner. Yes, HUF cannot be a partner. NBFC can, because NBFC is a company. It can be a partner. Okay. This question was already someone placed in the group. I have replied in the group also. Okay. Is it clear? Public limited company, how many members? See, public limited company, minimum members are 7, maximum unlimited. Maximum unlimited. Yeah, sleeping partner has got all his rights. All his rights. And he also carries responsibilities. He also is liable. Though he is a sleeping partner, he is liable for others. Okay. Liable for the actions of partnership firm with regard to others. Okay. Good. Any other doubts? Any other questions? So I'm moving further. Okay. Which are all the documents you need to obtain? For a proprietor, which document? For a proprietor, a proprietor's individual ID, proprietor's individual residence. Now, proprietorship firm's ID, that is, in case the proprietorship firm is carrying some business, then that business registration will be there with municipal authority, that or VAT number or sales tax, that is a VAT number, all those things are considered as additional documents for proprietor. There is a big list. Out of them, at least 2 documents are required. Secondly, a proprietorship business is carried out at some other place. So that particular residence place for the firm also required to be obtained in addition to the proprietor's ID and proprietor's residence proof. In a partnership firm, as I told you, we don't require document from all the partners, but the beneficial owner is a compulsory. Who is a beneficial owner? Whosoever has got more than 15% stake in the partnership, then his individual documents, his KYC is need to be carried out. In addition to the partnership firm, if the partnership firm is registered, then registration, partnership deed, okay, those documents are demanded. Same way the trust deed, then trust location, trust address, trust in the name of a trust, telephone number, then telephone bill. Limited company, the documents required are, number 1 document is Memorandum of Association. Number 2 is the Articles of Association. Number 3 is a Certificate of Incorporation. Number 4 is a Certificate of Commencement of Business. Number 5 is a resolution passed by the board of company to open a bank account. These are all the documents required along with the limited company's account. Hello, is it okay? Is it okay?
Yes, sir.
Common seal.
Private limited company, minimum 2 directors. Public limited company, minimum 3 directors. Maximum number of directors are expected to be 15 only. In case a company wants more than 15, then they have to take a permission from ROC. Okay.
Sir, common seal.
Common seal, earlier it was there, now it is not at all compulsory. Common seal is nothing but a seal where company's name is stated. Now any document on behalf of company is given duly signed by a director, isn't it? But representing a company is the company's seal. Likewise, when you work in a bank, when your branch manager is signing, there is a round seal of the bank is put, isn't it? That is a common seal for a company. Okay, common seal for a company. Now it is not compulsory, but generally a company continue to follow the old rules of 1956. Clear?
Sir, company PAN is necessary.
Company PAN is compulsory required. Partnership PAN is compulsory required. I think you may be knowing that recently the guidelines are came very strictly that company and the partnership firm business, anybody is carrying, then compulsorily for opening a current account, PAN is required. Even for an individual also, open a current account, PAN is required. So there is a PAN number allotted to partnership firm. There is a PAN number allotted to company. Okay, okay. Clear? Clear?
Yes, sir.
Good.
Sir, limited company once again, sir.
Limited company is can be an incorporated entity under a company's law 2013. There are 4 type of companies I have stated in a previous slide. Private limited company, public limited company, and 1-person company, isn't it? That way I have stated. So for company, which are all the documents required? Memorandum of Association, Articles of Association, then Certificate of Incorporation. Certificate of incorporation is nothing but a certificate given by the registrar of company that having registered this company. So certificate of incorporation is the birth date certificate for a company. Then 4th is a resolution passed by the board of directors. Okay, resolution passed by the board of directors. And then to operate the account and transaction therein, you require certificate of commencement of business. Okay, now certificate of commencement of business is required for a public limited company also, as well as for a private limited company also. Number of directors, I have told you that for a 1-person company, 1 director. For a private limited company, minimum 2 directors. For a public limited company, minimum 3 directors are required to be appointed. Who appoints the director? Directors are appointed by the shareholders, members. Clear?
Sir, maximum directors 15, na?
15.
Difference between memorandum of association and article of association.
Difference between memorandum of association is a document which tells to the external world about the company, why the company got established, what is that company's objectives, what company wants to do, and where is the company's registered office, whether company is likely to borrow or not. All that for the external world, relating details about the company are recorded there in a memorandum. Okay, articles of association is a document for internal functioning of the company, rules and regulations which need to be followed while carrying out the business of the company. That is the articles of association. Okay, and both these documents are openly available under the registrar of company. Anyone can visit, anyone can check. Okay, so when a person is coming to the bank, opening a bank account, and he states a kind of business which otherwise is not matching with the memorandum, then we may be liable for money laundering activity at a later stage. Are you getting me? So therefore, we must have to obtain the document, see the basic things in a memorandum, whether this company is really supposed to do this business or not. Therefore, opening a company account requires enhanced due diligence. You might have seen when the demonetization process, there were in the almost more than 2,500 companies identified as a bogus companies. Okay, 2,500 companies, more than 2,500 plus companies identified as a bogus, they were weeded out. Okay. I think I have discussed almost all the things. Here are a few questions. You can reply them. I'll move further because otherwise, no, we'll be under tremendous pressure. Okay. Different kind of deposit accounts. I don't think you require any specific information on this because you all are practical bankers. You are working, and type of deposits are demand deposits, time deposits. Okay, demand deposits, time deposit. Demand deposits are current saving. Okay, with regard to saving, I just wanted to tell one thing, that with regard to saving deposit, now minimum maximum balance bank decides. Okay, and with regard to interest, there is a possibility of differentiated interest. Differentiated interest means different interest to different customers. Possible. When it is possible, when a customer is maintaining a balance beyond 1 lakh, bank can take a call to offer an additional rate of interest for a person who is maintaining an average balance in the account more than 1 lakh. Question page. Which one? Okay. These pages are already there with you, dears. Okay. These pages are with you already. I have shared the presentation. No, these are all with you. You can ask me a question if you want. Okay. Okay. So as far as term deposit concerned, there are BSBDA, Basic Savings Bank Deposit Account. Yeah. What is that? What is the concern? Partnership account opening. See, a partnership, there are two different things need to be looked into. One is there are one set of partners are there and partnership firm is there. Now, partnership firm identity, how we are going to get either the partnership firm might have got registered. If it got have registered, then certificate of registration, which is obtained from registrar of firms, and also the partnership deed. These documents are basic document. Then in addition to that, the partners, wherever the partnership business is carried out, that place, maybe there may be a rent agreement or that rental agreement might have been entered, that rental agreement copy, or they might have applied for a telephone, then that telephone bill, or they might have already got the VAT certification, then VAT number. All those things you are going to obtain. In addition to this, the individual partners, partners ID proof and partners residence proof. So do you require all the partners ID proof and residence proof? There is the concept called a beneficial owner, and that beneficial owner is a partner who has got a stake in a partnership firm more than 15% is known as a beneficial owner. So compulsorily for such partners, you require ID proof and address proof. With regard to company, are you going to call for all the 1,000 members of the company in a public limited company documents? No. So therefore, the concept of beneficial owner applies there. A member who has got more than 25% stake in a company, more than 25% shareholding in a company, or influence in managing the business of the company if he holds, then such a person and all the key directors who are allowed to run the business, their documents are compulsorily to be obtained. Okay, I think that's point. BSBDA, what was that? BSBDA? BSBDA, Basic Savings Bank Deposit Account. Okay, Basic Savings Bank Deposit Account, which was allowed by the bank with regard to the people who do not have the all sort of KYC related document, the simplified procedure. Now this simplified procedure has got changed into a small account. Okay, now as such, Basic Savings Bank Deposit Account is an account where all the facilities are neither the customer demands nor we offer. Minimum balance requirement is removed. Okay, number of 4 withdrawals, not more than 4 withdrawals in a month. Okay, so likewise conditions are put in on the BSBD account. Pradhan Mantri Jan Dhan Yojana offers some additional features. So this BSBD thereafter continued as a Pradhan Mantri Jan Dhan Yojana account, where additional features such as the no minimum balance, any maximum balance, no restriction at all. Then in addition to this, the person who is allowed for a overdraft up to rupees, how much? In a Pradhan Mantri Jan Dhan Yojana, overdraft is allowed up to what? 10,000 or 5,000? 10,000. 10,000 OD, up to 10,000 rupees OD is allowed in a Pradhan Mantri Jan Dhan Yojana account. And this 10,000 OD is not a blanket OD. 10,000 OD depending upon the transactions in the account. Based on the transaction in the account, the limit up to rupees 10,000 is granted, not 10,000 blanket. Okay. Okay, let me continue. Now, here are few things which you must know with regard to deposit. One is KYC. Second, PAN. PAN is compulsory. If a person do not have PAN, Form 60, compulsorily. For all term deposit, bank is under obligation to do the tax deduction, provided the interest paid to the depositor exceeds a particular limit. What is the limit now? What is the limit now? Okay. Okay. Then I know confusion. Okay. So 40 and 50. 40 to others, 50 to senior citizens. Okay, 40,000. And in case an interest in a term deposit account in a year, if it exceeds 40,000 or 50,000, then bank is under obligation to do the TDS. And this TDS can be waived in case the person is giving a declaration to the bank in the 15G or 15H form, telling to bank that he doesn't have income which is liable for payment of tax. In that case, bank waives the TDS activity. Bank waives the TDS activity. Okay, 15G for general people, 15H for senior citizen. Okay, all the deposit accounts have got DICGC coverage. How much is the cover available? How much is the cover? 5 lakh. Means all depositors who, whether demand or the term deposit, up to rupees 5 lakhs are duly insured. Means in case the bank fails, the customer is definitely to get this 5 lakhs. Okay. Like Punjab Maharashtra Cooperative Bank failed, all the depositors are being assured that they will minimum get the DICGC coverage. Okay. And this DICGC coverage is not available on the deposits of government. Okay. Or other bank deposits. There is no cover available. Inoperative account, is an account where there is no operations in the account for a period of 2 years. Unclaimed deposit is a deposit where no operations are there for a period more than 10 years, then that is regarded as unclaimed deposit. All unclaimed deposit data required to be submitted to RBI, and within 3 months, the balance also required to be transferred to RBI, and that balance is maintained by Reserve Bank of India under DEF, Depositor Education Awareness Fund. Okay. Depositor Education Awareness Fund. Term deposit, in case it is matured and maturity value is exceeding rupees 20,000, including the interest, then it can't be paid in cash. It can't be paid in cash. Compulsorily required to be issued either a demand draft or to be credited in a bank account. The bank offers the additional rate of interest to senior citizen, the staff member. Senior citizen, whether all deposits are extra interest? No. Only term deposits for a period more than 1 year, only the extra interest is being paid. And that is 0.50 to 1%. So most of the bank, they offer 0.50% extra interest to senior citizens who are maintaining fixed deposit for a period more than 1 year. Bank can offer additional rate of interest to the people which are offering the non-callable deposits 15 lakhs and above, as well as more than 2 crore rupee deposit, high value deposit. With regard to deposit account, there is a facility called nomination. Nomination facility is available. Nomination facility is available for deposit, for lockers, and for the safe custody articles. Which accounts? All deposit accounts? No. Deposit accounts maintained in the name of individuals or joint individuals only, this facility is available. Nominee also should be individual only. Again, I wish that you must visit the IBS website. There is my lecture on nomination is available. You can coolly listen that. Okay. Any issues relating to that get sorted out. A nomination, when it is done by the illiterate customer, you require 2 additional people need to authenticate, or what you can say, attestation by the 2 people is required. One can be the bank officer and anybody other than the bank officer also. Okay. Now, in case the deposit is maturing on a holiday and customer is coming subsequent immediate working day, then bank is supposed to make the payment of interest for that holidays also. In case the deposit is due and customer is not withdrawing the deposit for an overdue period, bank supposed to make the interest payment, and now interest is 5, that is savings bank rate of interest. Can a deposit be prematurely closed? Yes, definitely. For a retail customer and the HUF, a premature closure is allowed. Locker in either or survivor also, the nomination is possible. Deposit in either or survivor also, nomination is possible. But safe deposit custody, either or survivor, nomination is not possible. Okay. In case nomination is available, in case the safe deposit locker, there are more than 2 people are operating the locker jointly, there is a possibility of more than one nominee. More than one nominee. Okay. Can a deposit be converted one scheme to another scheme? Yes, it can be converted without treating it as premature closure. Can a loan be granted against deposit? Yes, it can be granted. It can be granted. Okay. FCNR deposit, there is always a minimum period of deposit, and as such, premature closure is not allowed there with regard to FCNR deposit. Okay. In that case, the bank is not paying any interest at all for a deposit which is closed before the minimum period which is required to be completed, that is 1 year. Okay. Minimum and maximum balance, respective bank need to take a call. Yes, in case of a minor's account, a guardian can nominate. Minor cannot nominate somebody. Okay, a guardian, if it is operating, then guardian can nominate nominate a nominee. Okay, but a minor operated account, minor cannot nominate. Can a minor be the nominee? Yes, minor can be the nominee. However, when minor is a nominee, bank is always asking a major person on behalf of minor to receive the money or goods. So these are all few important things in a very quick manner we have covered. Okay. I think not a North Indian can, I'm sorry, North Indian can he open account with only Aadhaar? Oh, acha, your doubt I got clarity. See, Aadhaar is there, is a more than sufficient proof to ascertain the address. Okay, ascertain the identity. Now, with regard to the residence address, he may not have a proof. No need to worry. The bank allows now to open an account of such people based on a declaration obtained by him or based on a rent agreement if he has entered. Okay. DA1, DA2 and cancel DA3. Absolutely correct. Okay. DA1 is for nomination, DA2 for cancellation, and DA3 for any change of nomination, that is a modification. How many times the nominee can be modified? N number of times. Okay. In addition to this, I wish that you must look into, these are all other details. I don't want to spend time on them. Okay. Because I have got other important areas to cover. Okay. Let me permit. If we open account to a minor, yeah, I agree. That is what I've told you. A minor account operated by minor, there can't be nomination. But a minor account operated by a natural guardian, the natural guardian can nominate in that account. Okay. Now, these are few things you must have to have the clarity. Number of free transactions on a ATM. What is the charge for additional transaction? What is brown label ATM, white label ATM? What is the limit for digital transaction, IMPS, small value, without having any with the offline transactions? UPI limit for investment and other transaction. In case a digital transaction failed, how many days bank need to reimburse the customer? In case bank fails, then what is the compensation? So in the locker now, a revised procedure with regard to nominee, even a customer willing, he can give a photograph. Okay. In case there is a loss happens to the customer with regard to a locker holder, then that locker holder is allowed to get compensation. How much is the compensation allowed? Can anyone tell quickly? Any one person, at least one person I am expecting. Yeah. See, Soundarya, please note, an FCNR holder, minimum period is 1 year. More than that, if the deposit is there, premature closure is allowed. Okay. So compensation is not 100%, but 100 times of the rent. Okay. Compensation is not 100%, but 100 times of the rent. Okay, good. So all these questions, please be ready. You are going to get at least 1 or 2 bits from this particular slide itself. Okay. Let me move further. What is the prepaid instrument? Prepaid instrument is given to people. That is a prepaid card. Prepaid card, if it is KYC complied, no restriction at all. N number of times it can be filled in, N amount also can be used, no problem. But if a KYC is not complied, then the prepayment card at any point of time should be 10,000, and in a year it can't exceed more than 1 lakh. Okay. There are banker customer relationship. Okay. I'll straight away jump on to important aspects only. Number 1, bank duty to secrecy, duty to honor a check, and bank's right of lien, right of set-off, right of appropriation. These are the banker's rights and banker's duties. Banker's duty to secrecy, banker's duty to honor a check. These are duties. These are the rights. Anyone has got any question on this? Failed transaction should be settled within. Failed digital transaction need to be settled within. Within? Can anyone tell quickly? Within 48 hours maximum. Within 48 hours. And the ATM failed transaction need to be paid to the client within five which days?
Calendar days.
5
Working days.
calendar
Working
days. 5 not working days. 5 calendar days. Very good. Good. Thank you.
Sir, brown label ATM and white label ATM, sir.
Brown label ATM is a ATM run by a non-banking company. Okay. For example, Tata is a company. Tata don't run a bank, isn't it? Tata are likely to run a Central Bank of India after some time, but as on today, Tata don't have a bank. But Tata Indicom is running a ATM. Okay. So that ATM is a brown label ATM. Okay. A company which is not a bank, but still it operates a ATM, then such a ATM is a brown label ATM. Sorry, white label ATM. Okay, such an ATM is a white label ATM. And a brown label ATM is an ATM run by the bank. Means bank logo is there, bank features are there, bank's name is there, but operated by some third party. Such ATMs are brown label ATM. For example, I am in a Bhopal. Okay, my bank branch is in Bhopal, and my ATM which is there, which is running in a university. Okay, there is no branch, but ATM is being run at a 20-kilometer distance. Who is running that ATM? That ATM field, cash field, everything is managed by some third party. Such ATMs are brown label ATMs. Okay, sorry. Clear?
Clear, sir. Thank you, sir.
Okay. Now, with regard to these things, if you have any doubt, you can ask me. Otherwise, I'm straight away going to garnish order.
Sir, can you spell the bank's right of lien?
Okay. See, lien.
Sir, set-
Lien is a right to retain something which is in the hand. Okay. A creditor is there and there is a debtor. Okay. There is a creditor, there is a debtor. And this creditor is a person who receives something belonging to the debtor in the normal course of business in his hands. Now, he has got a right to keep that security or that goods in his hands till such time his debts are cleared. This right is a right of lien. Is it clear? The right of lien can be a general lien or particular lien. Right of lien can be general lien or particular lien. Whereas banker enjoys the right of a general lien. Banker enjoys the right of a general lien. Banker's lien is also known as implied pledge. Implied pledge. Okay. So to make you
Only
understand,
securities and goods, right?
only securities and goods. Now a doubt comes in many minds that, sir, we also mark lien on bank deposit. Okay, you mark it only when customer authorizes you. Without customer authority, you are not supposed to touch money in your hand. Are you getting me?
Yes, sir.
Okay.
Sir,
Then
sir, for banker lien, any notice has to be given to customer?
in case bank wants to make the goods disposed of, sold, compulsorily a notice is required to be given to the customer telling that we are disposing of the goods for the recovery of our dues.
Whether we have to wait for acceptance from the customer or we can go for
Not at all. It is a notice intimating them to that we are disposing of the goods. Now customer come forward and makes your payment. Then you are going to hand over the goods. That's all.
Same for right of set off also, no, sir? After giving...
No, right of set off is altogether different. Right of set off is there are two accounts of the customer. In one account, there is a credit balance. In another account, there is a debit balance. In another account, one account debit balance, another account credit balance. Both the accounts are belonging to same person. Both the accounts are became due. Both the accounts money became due. Such case, bank can adjust the credit balance with the debit balance. That is known as right of set off.
Sir, if accounts are maintaining in different branch, no, then we can.
Even accounts are maintained in a different branch, right of set off can be exercised.
Okay.
Okay. So this is what a right of set off. Okay, can I go through a garnish order? Garnish order is hello. Hello.
Clayton rule, sir.
Clayton rule. Okay, Clayton's case I need to tell. See, right of appropriation has got three things. Right of appropriation has got three things. Say there is a borrower who maintains three loan accounts. Borrower maintains three loan accounts. Loan account 1, loan account 2, loan account 3. He is remitting rupees 10,000 and asking you, please credit money in 3. Then bank do not have any right to appropriate this money other than 3, because customer has sent the money, he is telling you to appropriate in third account, that only, though the account number 1 likely to get NPA without receiving money. Is it clear?
Yes, sir.
Is it clear? That is what is a right of appropriation, section 59 of Indian Contract Act. Then second thing is, customer is remitting money, but customer is not at all informing which account to be adjusted that 10,000 rupees. Now here, as a creditor, we have every right to appropriate in any one of the account, including a time-barred deposit, time-barred loan account. Okay, so this is what is a section 60. Whereas section 61 is telling that in case of running account facility, bank allows running account facility, ODCC. In a ODCC, a deposit, a debit balance is there. Credit comes, deposit, debit balance comes down. Again, there is a debit, debit balance goes up. That's what it happens. Okay, debit and credit are continuous process. So how this appropriation need to be considered? The rule says the first credit coming in the account appropriates the first debit in the account. And this simple way to notification is becoming a complex situation for a banker when account is of a joint account. For example, a joint loan account. Loan or OD is in the name of ABC. ABC. On a particular date, there was a 3 lakhs was the dues. 3 lakhs was the due. And we receive intimation of death of Mr. B. Death of Mr. B. Okay, but we ignored because there is a credit is coming in the account. 1 lakh credit came. Then again 50,000 debit came. Balance became 250. Again 2 lakhs credit came and 1 lakh debit came. So what happened now? Again balance became 150. Clear? So like this, the transactions were allowed by the bank. Now at this stage, the account became NPA. Who are all the people liable? That point surfaced. So now because of the section 61 rule, what happened now? After 3 lakhs, a credit of 1 lakh came, credit of 2 lakhs came. Means what happened? 3 lakhs got nullified. So for 1,50,000 dues, we cannot make B's legal heir liable. So this is what was the Clayton's case, Clayton rule. Negative lien is a simple letter given by the borrower to the bank that he will not alienate, create a charge, or make any charge of anybody on the assets which are otherwise charged to the bank. Such a letter is a negative lien. Clear? Clear? Letter of negative lien is a letter given by the borrower telling therein that he will not part or create charge on the assets which are already charged to the bank. Okay, let me finish up. Garnish order is an order issued by court. Order 21, Rule 46 of CPC, Civil Procedure Code 1908. Now, Garnish is a bank. Garnish is a bank. An order is issued on Garnish at the request of the judgment creditor. Judgment creditor. Okay, to attach money in the money in the account of judgment debtor. And who is maintaining that account? Account is maintained by a bank, that is Garnish. What is the order? Why the money available in that account cannot be attached? This kind of order comes to the bank. That is a order nisi in the beginning order. Whereas bank confirms it to the court, you may attach the money after looking into other accounts maintained by the customer or making the set of making adjustments. It may intimate the court, and then court demands the money back. And that's the way order absolute comes. The order need to be fulfilled by the bank. This is what is a Garnish order.
Sir, order
When we are about to do the right of set off, that account is under Garnish order. Yeah, when account is under Garnish order, we now know that there is a due from the customer. Though the amount is not became due, because Garnish order received, we have a right to treat it as amount due. Okay, are you getting me? So money becomes due, deposit due, loan due, then only you can adjust. You cannot adjust a deposit which is yet to become due, and loan installments are also not due. You are not supposed to adjust a deposit with a loan account. But in a loan account, there are 3 installments due, and there is a deposit which already became due. You can definitely do so. Okay, clear? And Garnish order or attachment order, when it comes, first bank will look into first their own dues to be recovered, and then only it will attach the order of the court or income tax authority or sales tax authorities orders. Okay, which account it is attached? The same person, same capacities account. Can an order come on the partnership account, and a partner's account there is a balance? Can it be attached? Yes, but an order in the name of a partner comes and there is a balance available in the partnership firm account. It cannot be attached. When we can't attach, I did not understand exactly what you mean. So there are situations such as, for example, this question comes in an exam mostly, that there is a OD account is there. An OD account is there. The limit is unutilized, means the limit is sanctioned 1 lakh rupee, and there is only 10,000 is a debit balance. 90,000 is limit unutilized. Can you use this 90,000 for making good the Garnish order? No. Please note, your and your customer relation should be customer should be creditor and you should be a debtor. You should be a debtor. Okay, that basic idea you have to keep it in mind. Automatically problems get resolved. Clear? So Cobra, Consumer Protection Act, and the integrated Ombudsman scheme. I think these are all the few list of the relationships. You can have a look on them. Can either or survivor? Please make a note. Either or survivor is a joint account. And in case the attachment order comes, on a joint account, then not only the joint account, even individual account also is attachable. Okay, even the individual account is also attachable. Whereas an order comes on an individual name account and the money available in the joint account, either or survivor, can it be attached? No, it can't be attached. Is it clear? Same principle is for right of set off also. Yeah. Okay. So mandate, power of attorney, I don't think we really need to spend time. Okay. Here are a few things. I think if you have any specific question, you can ask me. Otherwise, I'll move. Someone was asking me question with regard to FCNR. I categorically told, yes, it can be. Which are all the foreign currency deposits are allowed to resident Indian? RFC. Institution don't give mandate. Institutions normally give power of attorney. Okay, institutions normally give power of attorney. Individuals can give a mandate as well as power of attorney. Garnish order is on today and one deposit will mature on tomorrow. See, amount due or likely to be due is attachable. You are just supposed to intimate to the court that there is a deposit which is likely to be due by such and such date. But garnish order will not attach the money which is yet to be received. For example, you have sent a check for collection to other bank and that check will be coming after 15 days. After 15 days, the check came. It can be credited to the account. But garnish order applies to which balance? The balance which was available at the time when you received the garnish order. Okay. So I think good. Here are few things. I think banking ombudsman. Okay. POA in power of attorney. If the agent is died, then what is the issue? Agent died. Let him die. Account belonging to principal only. But if the principal dies, then agent cannot operate the account. Okay. Are you getting me? So agent died, no problem because account belonging to principal. Okay. So please understand with regard to banking ombudsman scheme. I don't want you to listen a lecture. I think that let us go with the few MCQs on that. Okay. Let me go with the few MCQs and that will clarify you the banking ombudsman in full. Complete. Are you able to see the screen? Is that something is appearing in the screen? Hello, can I get a confirmation? Hello. Is that share is being seen?
Yes, sir. Yes, sir. I'm
Yes,
seeing.
sir.
Yes, sir. Yes, sir.
Yes, sir. Yes, sir.
Yeah, start answering very quickly. Without spending much time, quickly answer.
Yes. Ombudsman by government office.
D, sir. D.
B, sir.
B.
All are correct.
None of the above. None of the above.
Okay, now let me make you one point very clear. Now there is only one ombudsman. So ombudsman mostly situated at state capital is a wrong. Clear?
Yes, sir.
Clear?
Clear, sir.
Yes, sir.
Now, second thing is all scheduled commercial bank, regional rural bank, scheduled select non-scheduled primary cooperative bank. Now, which primary cooperative banks are covered here? Can you tell me? The banks which have got more than 50 crore deposit. Okay, those are banks which are part of the ombudsman scheme. Okay, now next, you can file a complaint to ombudsman if quick.
C, sir. C. Both of them.
Both of above.
See both of the above.
Good. Which of the following is incorrect regarding integrated banking ombudsman scheme?
All the above.
Very good. What is that? Which of the following is incorrect? Okay.
എല്ലാം correct ആണ്.
Ella correct ആണ് ಮತ್ತೆ? None of the above. Which of the following is correct regarding integrated ombudsman scheme? Correct. Now you are supposed to find the correct. Ombudsman entertains all customer grievances, is cost-free grievance redressal, customer complaints which are not replied by entities within 30 days, customer complaints which are not satisfactorily resolved by entities regulated by RBI.
Option C, 2, 3, and 4.
Only 2, 3, and 4. Please understand, all customer grievances are not entertained. Okay. Integrated Ombudsman Scheme 2021 is applicable to which of the following banks? I think you now know the answer. No need to waste time.
All 1, 2,
1,
and
2,
3.
and 3. Not all cooperative banks. Not all cooperative banks. Select cooperative banks. Correct, no?
Yes, sir.
C.
50 crores.
Yes, sir.
Integrated Banking Ombudsman Scheme has features such as One Nation, One Ombudsman, replaces different ombudsman schemes. For initial processing the customer complaint in physical form or through email, Banking Ombudsman at Chandigarh at Centralized Receipt Processing Center has been set up.
All correct,
All
sir.
are
D.
correct.
All are correct. Following information to Ombudsman regarding complaints filed by customer against regulated entity. For providing information to Ombudsman, what happens? Bank need to provide the responsibility to principal nodal officer. So every bank need to appoint a general manager level person as a principal nodal officer. And please make a note, in case if he doesn't submit the information or incorrectly submits the information, then the award is granted. Then for that bank, there is no appeal facility available. Regulated entity will not have the right to appeal in case satisfactory and timely information not furnished by the bank or the other entity. Complaints under Integrated Ombudsman Scheme can be filed by customer, email, online, physical mode, toll free. Any one of the above. What is the limit on amount of compensation? Amount of compensation?
20 lakhs. 20 lakhs. 20 lakhs.
20 lakhs
20 lakhs.
or the loss, whichever is high.
Yeah.
20 or whichever is high. What is the maximum period of ombudsman can be appointed for?
3
3
years.
years.
3 years.
Ombudsman may award a compensation to the complaint for loss of time and expenditure.
1 lakh.
1 lakh.
1 lakh. Appellate authority under the Integrated Ombudsman Scheme.
Deputy governor.
Executive
Deputy
Director.
Governor RBI is an old thing. Now it is a executive director in charge of consumer education. Okay. Is it clear? In case bank wants to make an appeal, it has to take a permission from CMD, CEO. Okay. So this is what is about. I think now no more doubts with regard to banking ombudsman. Correct, no?
Correct, sir.
How is the idea?
Excellent.
Sir, could you please share this PPT as well?
Which PPT?
Already
MCQs.
shared.
What you will do with MCQs? Okay. Now we will have a PPT questions on check. Okay. Very quickly. So that MCQs with regard to checks, doubts relating to checks will get sorted out. Okay. Shall we go?
Yes, sir.
Check is defined under.
6.
RBI check is considered valid for.
3 months.
Your branch receives a check of rupees 500 written in figures, 500 in 5 lakhs in words. Under section 18 of the Negotiable Instrument Act, bank
Need to pay amount.
Return
Return the check.
required to pay the amount written in words. See, whenever such question comes in examination, please read what is that this paper wants you to do. What is that? It is written as under section 18 of the Negotiable Instrument Act, bank need to do. But whether the bank will pass the check? No. Practically, bank will return the check. Correct. But question is asked under section 18 of the NI, bank is required to pay the amount. Correct. When a check is crossed with 2 parallel lines with word and co, crossing is known as
General
crossing.
Special crossing. General crossing.
Okay. Account pay return, then it crossing is
Special crossing.
Special
It
crossing.
is also general crossing.
Yes,
sir, yes, sir.
Name is
Okay,
mentioned.
which is special crossing? Only
Bank
when the
to
name
bank.
of the bank is there.
Bank
Name of the bank is there, then only it is a special crossing. Which of the following type of check can be endorsed? Which of the following checks
Bearer
can be
check,
endorsed?
sir.
Bearer
Bearer check.
Question number 3. What is that? Why you are worried? I don't know. Question number 3. Yeah, I have told you the answer, no? As per section 18 of the NI Act, bank is required to pay the amount written in words. Okay, but if these words are missing in the exam, bank will, then what is your answer? Bank will return the check. If this is missing, then your answer is bank will return the check. Is it clear? Then which of the following type of checks can be endorsed?
Bearer check.
Bearer check.
Bearer check, no need to endorse.
Payable. Option C.
Order check.
Order check.
Bearer checks, no need to
Order check.
endorse. Checks payable to the
Payable to the
order
order of your named payee.
Named payee. X issues a check favoring Y, puts a condition that the payment is to be made only when Y fulfills the condition. This is a conditional endorsement.
Answer.
Hello.
Question number 6. Answer.
Checks payable
Checks
to the
payable
order
to
of
the
a named
order of
payee.
C.
X issues a check favoring Y and puts a condition that the payment is to be made only when Y fulfills the condition. Y obtains the payment from a bank without complying the condition. X demands damage from the bank. Quick.
Endorser and endorsee, sir.
It is only between endorser and a bank, has nothing to do with that. Very good. Plain sheet appended to negotiable instrument for purpose of making endorsement is allowance. Your customer Veerappan issues a check payable to sell for order. Is presented for payment by his peon Prakash. Check is endorsed by Mr. Veerappan in blank. Check should be paid, should not be paid. Okay.
C, sir.
Quick.
C,
I
sir.
think
C, sir.
C, sir. C.
very good. Now with this, I'll stop. Mr. Dharamveer has given a power of attorney to Mr. Ashok Kumar for
Sir, previous one answer, sir. Previous question answer. Can you just
previous question answer? See. Okay.
What is the answer, sir?
Check can be paid as it properly drawn and endorsed in blank. And no sooner it is a blank endorse, then it becomes a bearer check.
Bearer check.
Mr. Dharamveer has given a power of attorney to Mr. Ashok Kumar for operation of account, dealing with the negotiable instrument drawn in favor of Dharamveer. What will be the correct endorsement by Mr. Ashok Kumar? A, B, C, D, E.
D, sir.
D. Okay. Thank you so much. I'm stopping it because I have got a loans part to be completed and I don't have much time. Okay.
Sir, could you please explain that working capital assessment, sir?
I'm coming that only, there only, because now once this part is over, no, then I have got a loan part only left over now. Okay. Intentionally, I have covered this part in this way so that I can have time for loan area.
Sir, priority sector, sir.
Everything. Okay. Priority sector, loans. Now you started. See. Okay. So first of all, these basic things I will not cover, such as character, capital, capacity, etc. Blah, blah, blah. All these theoretical. Okay. Now, understand there is a secured loan and unsecured loan. What is mean by secured loan? For a loan, when there is a security available, maybe a primary security, maybe a collateral security. When there is a security, loan is a secured loan. When there is no security, the loan is unsecured loan. Is it clear?
Yes, sir.
Yes, sir.
For example, personal loan granted to a person, okay, for performing the marriage of his daughter. The loan is granted on the basis of his salary, his capability to pay. And there is no security, no primary security, no collateral security. Then that loan is a unsecured loan. Is it clear?
Yes, sir.
Now, second.
PPT is not visible.
What is, oh, PPT is with you, no? PPT is with you. Okay. Now, visible?
Yes, sir.
Yes, sir. Yes, sir.
Then second thing is, which are all different type of loans and advances. Basically, bank sanctions fund-based advance and non-fund-based advance. What are all the non-fund-based advances? Yesterday, I told you. Now, which are all the fund-based advance? Fund-based advances are where bank parts money. Now, based on the period for which loan granted, the loan may be a demand loan may be a short-term loan may be a long-term loan. Demand loans are the loans which are to be repaid by the person in one go. For example, a loan granted against jewelry of the gold jewelry, isn't it? Normally repayable in one go. That is a demand loan. You may sanction even a gold loan in a term loan basis also. It is not stopped. But such loans are demand loan. Loan against deposit, demand loan. Okay. So this is what is a demand loan. Short-term loan is a 1 to 3 years. 1 to 3 years is a short-term loan. Long-term loan is more than 3 years up to 30 years is a long-term loan. Clear? So actually, as per Reserve Bank of India, demand loans up to 3 years, short-term loans up to 7 years, and any loan more than 7 years is a long-term loan as per RBI guidelines. Okay. Then based on the purpose-wise, loan may be for working capital, loan may be for project, loan may be for export, loan may be for agriculture. Okay.
Sir, please come again the base. Sir, please come again the previous one, sir. Short-term, long-term loan.
Short-term. See, as per Reserve Bank of India guidelines,
as per RBI, sir.
As per RBI guidelines, loan for a period up to 3 years, is a demand loan. Short term is more than 3 up to 7 years. More than 7, any period is a long term. Clear?
Yes, sir. Thank you, sir.
Then, for the purpose-wise, working capital or project finance or export purpose or agriculture crop loan purpose. Okay. So these are all the loans based on the purpose we give the name. Based on the person to whom the loan is given, maybe the corporate loan, retail loan, agriculture loan, institutional loan, international loan, that is okay. Like that we nomenclate. So no need to get confused. So facilities are facilities, and facilities are the loans are granted by the bank on 2 different ways. One is a directed, another one is a bank discretion. Directed is priority sector advance, because Reserve Bank of India under priority sector advance guidelines, which makes compulsory bank to finance to a particular sector up to such and such level. That is a directed credit. And anything which is granted to anybody as per bank's own loan policy is a bank's discretionary credit. Clear? Directed credit, under the directions from somebody, we are granting loans. Retail and wholesale. Individual loans, retail loans. Corporate loans, commercial establishments, it is a wholesale. Okay. Who are all the borrowers can be? Individual can be borrower, joint individual can be borrower, a proprietary firm can be borrower, partnership firm can be borrower, a joint venture can be borrower, LLP can be borrower, HUF can be borrower, company, private limited, public limited, government company can be borrower, any statutory corporations can be borrower, trust cooperative societies can be borrower, SHGs can be borrower. These are all the borrowers. Okay. Depending upon the kind of facilities, it is a demand loan, term loan. Demand loan required to be paid in full. Term loan required to be paid in installments. Okay, required to be paid in installments. Overdraft, a limit is granted to a person beyond a particular balance available in an account. That is a overdraft. For example, a current account customer is maintaining a balance in his account up to 1 lakh. So he may be allowed more than 1 lakh to withdraw from the account. He is termed as overdraft. There is a possibility that we may sanction a overdraft limit, or there is a possibility that we may sanction once in a while to that facility to that customer, depending upon his transactions in the account, depending upon his dealings with the bank. Okay, clear? There may be a limit, there may be a once in a while facility. Is it clear?
Yes,
Overdraft may be allowed to a person against the some collateral security also. Okay. Cash credit facility is a facility granted to the customer against the stock or against the book debts. Against the stock in trade or inventory or book debts, the limit is granted to the person. Normally, cash credit limit is granted to the person for managing his working capital requirement, to managing the working capital requirement. Exam point of view, cash credit, there are 3 important things to be noted. Number 1 is a DP, drawings. Number 2 is a margin. What is the drawing power? DP. For example, we have sanctioned to a borrower a limit of rupees 10 lakhs. 10 lakh is a limit sanctioned. And we have prescribed a limit with a margin of 20%. 20% should be the margin maintained by the customer. Means customer should bring at least 20% of his own money. And on a particular day, he has submitted a stock statement with 8 lakh rupees stock and book debts in his shop. Now, 8 lakhs is the value of book debts. 8 lakh is the value of book debt and stock. 10 lakhs is the limit. 20% is the margin. How much would be the drawing power? How much would be the drawing power?
10 lakhs. 20.
So either 8 lakhs or 10 lakhs or something less different.
8 lakhs.
640. Very good. How you arrived at? You see what you did. 8 lakh is a stock available. 20% is a margin. That is 1.60 is a margin. So out of 8, 1.60 are compulsory to be required to be contributed by the borrower. So we are allowing him 6,40,000. Now, in place of 8 lakhs, there is a 18 lakh stock. How? Now what we will do? Now what we will do?
10 lakhs. Only 10 lakhs.
Only 10 lakhs. Very good. Okay. The limit will, the DP will never exceed the limit. Clear? Clear? Then
Yes,
there
sir.
is a bill finance. Yesterday we have discussed elaborately on bill finance, bill purchase, bill discounted. There is an important term comes into the loan related part. Bank will always ensure the end use of fund. What does it mean? The purpose for which bank has granted the loan, bank need to ensure that the money utilized for that purpose only. That is what is a end use of funds. Non-fund based facilities, performance guarantee, financial guarantee, deferred payment guarantee, co-acceptance and letter of credit. All these aspects yesterday we have discussed. Still you have any doubt? You are welcome. Margin. How much margin we can stipulate? It is minimum normally 25% is a PPT is not visible. How come? Abhi. Yeah. May I get the confirmation?
Visible, sir.
Visible. Thank you. Thank you. Okay. Okay. Now, margin. Please understand, generally the margin is 25%. Generally, bank stipulates margin 25%, means 75% is the value, that value of assets which are acquired or created. 75% is the loan, 25% must be brought in by the borrower. That is a general norm. Whereas normally 25%. Whereas under turnover method, for calculation of working capital requirement, it works out at 20%. It works out at 20%. Whereas under government-sponsored schemes such as Mudra or PMEGP, it may be 10 to 15%. Okay, and bank-wise, facility-wise, borrower-wise, scheme-wise, bank may stipulate varied margin. Now, very important part we are starting. Please focus very attentively. Number one is the gross working capital. What is working capital? What is working capital? Working capital is a quantum of money which is required to a business firm to carry on its day-to-day business activity. To carry on day-to-day business activity, which Mudra, Pradhan Mantri Mudra Yojana. Okay. Pradhan Mantri Mudra Yojana PMMY. Micro Units Development and Refinance Agency. Mudra. Micro Units Development and Refinance Agency. Okay, this is a Mudra. Anyway, let me come back to that area at a later stage. Okay, first please listen carefully. A business actually is working only when it starts manufacturing or selling the goods. By merely having a shop will not be of any use, isn't it? For a shop to run, there is a stock required. That stock is required to be sold. And once again, the stock is required to be filled in the shop. The amount of money which is blocked in the shop, blocked in the customer's receivables, is the amount which is blocked in the operating cycle. And that is what is known as gross working capital. Gross working capital is nothing but total current assets. Point is clear? Point is clear?
Yes.
For example, a manufacturing entity, what it does? With the cash, it buys, or with the cash which buys material, or with the creditors, it buys the raw material. This raw material goes on the floor to start working. Okay, goods are being manufactured. Thereafter, goods are be ready, they become a finished goods. Then finished goods are sold, they become the debtor. And the debtor will repay back the money. Now, raw material is moving from here to here. Whether the raw material is blank here, again the raw material is there. Raw material for 1 month, work in progress for 1 month, finished goods lie there for 2 months, debtors for 2 months. So in the process, 1 plus 2 plus 2, 5 months annual turnover is blocked in there. So this much is his requirement. From this requirement, there is a possibility so that this gross working capital is nothing but total current assets. This is current asset, this is current asset, this is current asset, this is current asset. Whereas this is current liability. Okay, current liability other than bank borrowing. So that is known as working capital gap. Working capital gap is total of all these minus this creditor. Clear? Clear?
Yes, sir.
And in case there is a bank OD, bank CC is also available. Bank CC is also available. CC limit is available. And bank, this particular customer has utilized a part of CC. Then how to arrive at his stake, his margin? That his margin is known as net working capital. Net working capital is nothing but total current assets minus total current liabilities. Total current assets minus total current liabilities. That is NWC or margin. Hi dear, can I move further?
Yes, sir.
Yes, sir.
Now here are few terms you can read, get to clarify. Working capital is nothing but funds that anyone requires for carrying day-to-day function. It is the sum of the total current assets. It means total amount of the circulating assets such as inventory, receivable. What is the current asset? Current assets are raw material, consumable store, work in progress, finished goods, outstanding receivables, sundry debtors, prepaid expenses are current assets. Higher the current assets means actually higher amount of blocking in the current assets. So it indicates the loss in profit, reduction in profit. What is the current liability? Current liability is nothing but any amount which is due to the company or any amount which is to be payable by the company within a span of coming 1 year is a current liability. Current liability includes the sundry creditors, deposits due within 1 year. Okay, deposits due within 1 year. Not own funds are current liability. Okay, bank loan, that is a CC limit outstanding, is a current liability. Total current assets minus total current liability is net working capital. And current assets by current liability is a current ratio. Ideal current ratio is 1.33. Even banks are now ready to accept even 1.17. Now, how the working capital is arrived at, how the working capital limits are sanctioned or decided, there are different methods. Okay, there are different methods. One method is operating cycle method. Operating cycle method is that what I have shown you earlier. What was that? So this is the operating cycle. Now, bank will calculate actually the amount, how much is blocked in the current assets. Means how much amount is blocked in the raw material, how much amount is blocked in the work in progress, how much amount blocked in the finished goods, how much amount blocked in the debtors. This is calculated, and from this creditors payable are removed, and that's the way working capital gap is arrived at. And this way of calculation is known as operating cycle method. For a quick understanding, I have given you here the operating cycle. 30 days raw material means whatever it produces in a year, 30 days requirement is there always in the raw material. Always goods are 15 days worth, goods are always lying in a process. Finished goods are lying for 15 days. Collection is 30 days. So put together 30 plus 30 plus 15 is 90 days. So 90 days is nothing but in a year there are 4 cycles. And in a year there are 4 cycles, means if annual turnover is 70 lakhs. Okay, annual turnover is 70 lakhs and operating expenses means minus 10 lakhs is removed, then operating expenses 60 lakhs, then 60 is 1/4 is requirement. That is 15 lakhs is requirement of working capital. That's the way bank calculates the working capital requirement. This method is known as operating cycle method. Mudra, I have already told, I'll write here. Micro units development and refinance agency. Okay, I'll put in the chat box. Is it clear, this slide? Now, second method is.
Can you explain once more, sir?
See, now money blocked, raw material 30 days requirement blocked, process 15 days blocked, finished goods are 15 days blocked. Then average collection period is 30 days. Means we are giving the debtors 30 days time. Total is 90 days, isn't it? And our actually raw material plus expenses are 60 lakhs. Okay. Now, if 60 lakh is the annual expenses, how much is the block? 90 days. 90 days in a year are nothing but 1/4. So 1/4 of 60 lakhs is 15 lakhs. So 60 lakhs worth expenses, 70 lakhs turnover. 1 minute. 15 lakh is requirement. What we did? We have calculated only requirement. Requirement is 15 lakhs. We prescribe margin. Margin is 25%. 25% of 15 lakh is 3.75. And as a result, 11.25 will be the limit. 20% if we prescribe the margin, then 3 lakhs is the margin requirement. So we sanction the limit of 12 lakhs. Clear?
Clear, sir.
Clear?
Yes.
This is the operating cycle method. The next is a projected net working capital method. So projected net working capital method is their turnover. their assets, all those assets are projected assets are calculated, projected current assets are calculated, projected current liability is calculated, and based on that the projected turnover, that net working capital also gets calculated, and that depending upon that projected current assets and projected current liabilities, limit is arrived at. That projections based on the past performance, projections based on the past performance are arrived at. For example, my last year's balance sheet, when I assess, then I understand that on an average working capital level, on an average, the raw material levels are at X level. Then my finished goods levels are at X level. Then X plus XX, like that I calculate current assets and current liability and arrive at the working capital. And this projected NWC means expected NWC is the factor here based taken into account, and accordingly I calculate the working capital requirement. Normally this method is applied for the high value loans, 5 crore, 10 crore, more than 5 crore loans are calculated on the basis of the projected NWC method. Now up to 5 crore, up to 5 crore of MSME and up to 1 crore for non-MSME. Okay, 5 crore for MSME and up to 1 crore for non-industrial entity. This is a manufacturing entity, this is a trading entity. So up to 5 crore and up to 1 crore are calculated on turnover method. And a turnover method is the simplest method suggested by Mr. Nayak committee. And the simple method is the turnover, annual turnover expected is 60 lakhs. So working capital requirement is 25%. And bank can fund 12 lakhs and margin can be 3 lakhs. For example, annual turnover is projected by the customer 100 lakhs. Then how much will be the working capital loan? How much will be the limit for 100 lakhs?
25 lakhs.
80 lakhs.
100 lakhs. Limit will be 20
75
lakhs. 20 lakhs. Okay, limit will be, because turnover 20%. See, annual turnover 60 lakhs. 20% of the turnover is a bank funding. 20% of the turnover is a bank funding. Now, exam point of view, you have to remember like this. When it comes to the bank funding, it is 20% of turnover. When the word working capital requirement or a working capital gap is considered, it is considered at 25%. And 5% margin is compulsory stipulated. So these three different words you need to understand and keep it in mind. And this method is applicable for whom? This method is applicable for MSMEs, manufacturing entities up to 5 crore loan requirement, and for a trading activity up to 1 crore requirement. This turnover method only need to be applied. Now, next question comes, whether that anything which is projected given by the customer is acceptable? No, it is a projected and accepted turnover by the bank. Now, next question comes, how the bank decides about that projected turnover. Bank decides about the projected turnover based on its past performance, based on the orders in hand, based on the orders in hand. Clear? Then with regard to the cash budget method, is a method applicable for software industry, for seasonal industries, where actually cash received, cash payment is calculated. Wherever there is a payment is higher in a particular period, that period, what is extreme period requirement is sanctioned as a limit. Okay. Then I think rate of interest part is coming up now. Very important part. There are MCLR, EBLR. MCLR is a marginal cost based lending rate. What is the marginal cost of the funds? Plus, due to CRR, there is a loss to the bank. That is a negative carry on CRR. There is a overhead cost and the period tenor, that is for how long the loan is sanctioned. Depending upon that, the additional charges. So that's the way MCLR is fixed by the bank. Whereas external benchmark lending rate is lending rate linked to either repo rate or 91-day treasury bill, 182-day treasury bill, or FBIL rate. Okay, based on that, when we declare the rate, that is a external benchmark lending rate. Okay. What is the paid up stock? Paid up stock is nothing but stocks minus creditors, stocks minus sundry creditors. That is what is a paid up stock. Means value of the stock is there. At the same time, there are creditors to be paid. Means actually paid up stock is this much. That's the way we calculate. What is the impact of underfinancing? Whether it is underfinancing or overfinancing, both are harmful to the unit. Therefore, bank should not resort for underfinancing or overfinancing. Okay. Then I think my time is up. If unless and until you are willing, I will not continue. Okay. What I'll do, I'll straight away go to somebody was asking me some question relating to this DA1, DA2, etc. yesterday. Okay. I think I have resolved all the queries. I'm going one by one. Okay.
Sir, priority sector, sir.
Yeah. I'm coming that. That's what. First of all. Okay. So priority sector is here. Next slide. Next, I think hardly 3 or 4 slides are there. Okay. Priority sector is a sector to which bank is compulsorily to finance. Exam point of view, please note. Exam point of view. Please note that the targets are prescribed to the bank linked to ANBC or CEOBE. What is ANBC? Adjusted net bank credit. What is CEOBE? Credit equivalent of off-balance sheet exposure. Credit equivalent of off-balance sheet exposure. That's the way it is being fixed. Okay. And targets are, general targets are 40%. And this 40% priority sector advance target is applicable to domestic scheduled commercial banks, foreign banks with more than 20 branches. Okay. Even the same target is available for foreign banks with less than 20 branches also. So priority sector advance target 40%, whereas for RRB 75%, for small finance bank 75%. Means they must have to achieve this. In case they don't achieve, a bank don't achieve a priority sector advance target, what happens? Then bank will be compelled to deposit that deficit in the bonds which are prescribed by Reserve Bank of India, wherein we may not get the required yield. We may not get the required yield, required income. This is what is a priority sector, total priority sector target. In the same way, there is a target prescribed for agriculture, and that is 18% of ANBC, 18% of CEOB. Many people are under confusion. 18% of 40, no. 18% of 40, no. 18% of ANBC must be to agriculture. Within the agriculture, again, there is a segment called small farmer, marginal farmer. Who is this small farmer? Any agriculturist who holds agricultural land up to 5 acres is a small farmer. A person who is holding agricultural land up to 2.5 acres is a marginal farmer. 1 hectare, 2 hectare, or 2.5 acres or 5 acres. Clear? For small farmer, marginal farmer, there is a target for current year 9%, which is likely to increase to 10% by 23-24. So you remember only 9%. For SFMF, 9%. For micro enterprises, means small segments of service sector or manufacturing sector also, there is a target that is 7.5% of ANBC. All targets are against ANBC, COB. Okay. And there is a target for weaker sections. For RRB, 15%. For small finance bank, it is 11%. And for other banks also 11%. So remember, for RRB, 75 and 15. 75 here for SFB, small finance bank. So what is a micro unit? Micro units are those units which are complying two requirements. One is the investment in plant and machinery or equipment and turnover. Up to 1 crore investment in plant and machinery or equipment with a turnover up to 5 crore is a micro unit. And a finance to micro unit, there is a target that is 7.5%. You can see here. This 7.5% is a target for these micro units, such as cobbler, carpenter, cobbler, carpenter, barber. Okay, these are all micro enterprises. For them, compulsorily finance need to be given because for them, investment in their required equipment is less than 1 crore. Okay. Then small units are equipment or plant and machinery investment is more than 1 crore, but up to 10 crore with a turnover 50 crore. Then medium enterprises more than 10 crore up to 50 crore, turnover 250 crore. So both the conditions are required to be complied to classify a micro, small or medium. And a unit where more than 10 crore is invested in plant and machinery, it is large unit. It is a large unit. And a finance to large unit is not a part of priority sector. Only micro, small and medium enterprise only is a part of priority sector. Within this, for a micro unit, Pradhan Mantri Mudra Yojana, Shishu Kishore Tarun, up to 50,000 loan, 50,000 to 5 lakh loan, 5 lakhs to 10 lakhs loan. Exam question compulsory comes from this slide. Please make a note. Anyone has got confusion, they can clarify it. I think 11 o'clock is my time. I still has to go. I'll go. Don't worry. Okay. So here I'll complete the priority sector and then we will take a call. I have explained small farmer, marginal farmer. Even all the landless laborers and tenant farmers are also included in the marginal farmer for the purpose of target. Loan is granted not only to agriculture, but all agriculture allied activities such as poultry, dairy, fishery, piggery, beekeeping, all that is also included under the agriculture for classification under agriculture, so that agriculture advanced target can be linked to. Okay, loans to individual farmers, any amount of loan is agriculture. But when loan to company, loan to partnership firm is granted for agriculture activity, only up to 2 crore is considered as agriculture. Amount of loan sanctioned for construction of cold storage, construction of godown up to 100 crore is a priority sector agriculture. Food processing unit such as sugar mill or the rice mill or the tomato sauce unit, Kisan ketchup unit, up to 100 crore loan can be sanctioned, which is agriculture. A loan to farmers cooperative credit society up to 5 crore is agriculture. Okay, so this is agriculture. Then agriculture, next part is other priority sector advance. Okay, agriculture MSME over. Now other. For export credit, it is 2% of ANBC sanctioned during the current financial year. That is incremental advance. Incremental increase in export credit up to 2% of ANBC is treated as priority sector advance for other banks, whereas for foreign banks, this can be up to 32%. Okay, this can be 32% for whom? For foreign banks. Then education loan, any education loan sanctioned up to rupees 20 lakhs is a part of priority sector. A loan sanctioned more than 20 lakhs is not a priority sector. Similarly, all housing loans, they are not priority sector. Only housing loans sanctioned 35 lakhs and 25 lakhs are only priority sector. 35 lakhs in a metro, that is a population more than 10 lakhs, or 25 lakhs less than 10 lakhs population area is a priority sector. Second condition also required to be met, a loan of 35 lakhs where cost of house, that price of house is 45 lakhs. Cost of house is 30 lakhs. then only it is considered as priority sector. For example, someone is buying a house of 1 crore in Hyderabad. He is taking a loan of only 15 lakhs. But is it a priority sector? No, because cost of house is more than 45 lakhs. Hope it is clear. Okay. Then even a loan sanctioned for repair of a house, 10 lakhs and 6 lakhs is also a priority sector. 10 lakhs in a metro area, 6 lakhs is a non-metro area, is a priority sector. So all these means other priority sector advances, MSME and agriculture put together should be 40% of adjusted net bank credit. Purchase of a tractor, not having agriculture land, used for agriculture purpose, definitely it is an agriculture loan. Okay. Clear? So in addition to this, even bank sanctions loans to the NBFCs, other non-banking finance company, housing finance companies, then that part also is considered as a priority sector loan for the bank. And there are certain conditions. There are certain conditions such as agriculture loan, NBFCs, not 10 lakhs per borrower they are sanctioning. Then only it is a priority sector agriculture. If an NBFC is sanctioning loan to MSME, then not more than 20 lakhs per borrower. Okay. So these are all the things under priority sector in a nutshell. I think very quickly, here are few things left over. That is social infrastructure, 5 crore for school, drinking water, sanitation facility. Whereas someone is under Ayushman Bharat, someone is setting up hospital in the rural area, up to 10 crore loan sanctioned to him can be considered as part of priority sector. Solar energy or wind energy, windmill, bioenergy, up to 30 crore loan sanctioned to that company is a priority sector. Even individually setting up of a solar energy plant on his house, then up to 10 lakhs can be sanctioned. It is a part of priority sector. Now, startups are there very much booming. Up to 50 crore for startup is a priority sector. These are all the priority sector. Anyone has got doubt or something to clarify, they can ask. I can clarify the doubt. Yeah.
Sir, repair, what is this 5 and 2?
Repair. See, this 5 and 2 were previous figures earlier. Increased to 10 and 6. Okay, good. Because what happens? No, you people read different books and different books have got these figures. So you should not get confused. Therefore, I have made it in a bracket and I want to explain. For example, there were many doubts. Sir, for banking business, 20 partners, 10 partners like that. It was an old thing. Now, no more applicable. Okay. Clear? Now, as far as government-sponsored schemes, let us understand very quickly. PMEGP, project cost 25 lakhs for manufacturing, project cost 10 lakhs for non-manufacturing activity. Loan sanction to educated unemployed youth. Okay. Pradhan Mantri Mudra Yojana is a loan sanction to a micro unit up to 10 lakhs. Collateral free loan. No collateral security to be insisted upon. Under National Rural Livelihood Mission, loan to SHG up to 20 lakhs is sanctioned to the borrowers, and that to collateral free. Under National Urban Livelihood Mission, 2 lakhs per individual or up to 10 lakhs to a group can be considered because there are two different segments under National Urban Livelihood Mission. PM Swanidhi Yojana is there, up to 10,000 for the people who are running street vendors in urban centers. For them, up to 10,000 rupees loan is there under PM Swanidhi. When account becomes bad, long-term crash. Good. So NPA part you are asking, no? So NPA part we will cover like this. See, first of all, the loan, either standard or SMA 0, SMA 1 or SMA 2. Standard, absolutely fantastic, no sign of sickness, no repayment due, everything is good, absolutely standard, no issue. But within the standard, if the installment is due for 30 days, then SMA 0. Installment due for 1 month, 30 days, SMA 0. More than 30 days installment due, then SMA 1, SMA 1. More than 1 month installment due, SMA 1. More than 2 months as installment due, SMA 2. And more than 3 months, account becomes NPA. Account becomes NPA. And account becomes NPA not only when installment becomes due. In agriculture loan, the loan becomes NPA when it is not repaid within a specified period prescribed for account classification as NPA. So, for example, agriculture accounts are classified NPA on the basis of the crop season. Short duration crop or long duration crop. Short duration crop or long duration crop. So, if it is a short duration crop, then 2 seasons are added. Okay, account become due on 30th June. After that, 2 seasons are added, and then only account will be classified as NPA. Whereas long duration crop, that is a crop where more than 1 year duration is there. For such a crop, 1 season is added for classifying an account NPA. Once account is classified as NPA, it first of all, it enters the substandard stage. Substandard stage. Okay. Then 1 year, up to 1 year, it remains in a substandard category. After 1 year, it goes to doubtful category. And first of all, it lies in a DA1 category, doubtful 1 category for a period of 1 year. Okay, for a period of 1 year. More than 1 year, up to 3 years, it is in a DA2 category. Okay, then more than that period, then it is in a DA3 category, and it remains in DA3 category lifelong till such time bank classifies the account as loss. Bank classifies the account as loss, or bank considers account as a loss. Pradhan Mantri Employment Generation Program. Yeah, what is that you require? PMEGP, what is required? I don't understand the question, Chandra Prasad. Okay. So this is what is a substandard, doubtful, and loss. Anyone has got a doubt, they can ask me. Because yesterday, I think yesterday or day before yesterday, Mr. Vinayak Apte sir was explaining you in detail about all these things. Anyone wanted to have a clarity, they can ask me. Okay. Any account under SMA category, more than 5 crore, bank is under obligation to report it to CRILC. What is CRILC?
Credit on large credits. Large credits. I mean, we need to give information on the
Central Registry of Information on Large Credit. Central Registry on Information on Large Credit. We have to report it to CRILC. Okay. Any account having more than 5 crore and above limit and under SMA category. Under any SMA category, it has to be getting reported under CRILC. Who manages CRILC? CRILC is managed by RBI. So any borrower who is not cooperating the bank, who is not furnishing the data, who is not allowing bank not to carry out the book debt inspection, stock inspection, such customers can be classified under the non-borrower, non-cooperative borrowers. On 5 crore and above, non-cooperative borrowers are required to be reported to RBI. Any account, any NPA account where there is a fraud, where there is a possibility of fraud, more than 50 crore, it is a red flag account. Bank need to report it to RBI. Red flag account. Yes, employment generation is a compulsory aspect under PMEGP, and that is what is the objective. Okay. Then as far as DP insurance, we have discussed, insurance is compulsory whenever there are assets created out of a bank finance or assets are charged to the bank in the form of security. Okay. I think we have discussed more than sufficient things. Priority sector over. Now, last part I think is this Mudra, LTV. LTV is there. Mudra, Micro Unit Development Refinance Agency.
Sir, provisioning for substandard accounts.
Yeah, provisioning for substandard. Okay. For all the assets, provisioning is required. For standard assets, 0.25% in respect of retail and MSME, 0.25%. Other standard assets, 0.40% of outstanding, 0.25% of outstanding. Okay. And any advance which is granted for commercial real estate, then 1% of the outstanding is a provision required. That is for standard. Now, when it comes to the substandard account, how much is the provision required? 15% of outstanding. 15% of outstanding. In case there is a security deterioration in the account, there is no security in the account has happened, then additional 10%, means additional 10% for unsecured portion, means unsecured part 25%. For example, an account where the outstanding is 100 lakhs. Security which was originally 120 lakhs, but on the day when we are classifying NPA, that day security available only is 80 lakhs. Is it clear? Security available is 80 lakhs. So unsecured portion is 20 lakhs. So 15% of 80 and 25% of 20. 15% of 80 is 12 lakhs and 25% of 20 is 5 lakhs. 17 lakhs is the provision required in a substandard account, which is explained to you like this. 100 lakhs is the loan outstanding, 80 lakhs is the security available, 20 lakhs is the unsecured portion. Okay, clear? Clear? Hello.
Sir, that
Clear or
related to
not?
commercial real estate, once you repeat, na sir, how much percentage in loan?
Commercial real estate, as far as my knowledge or my remembrance is going, it is 2%.
Okay, one more 0.25 and 0.4 you told us, sir, that 2 for what?
0.25 is for retail and MSME. Okay, retail loans and MSME, 0.25%. Okay.
And 0.4?
0.40% for all other standard assets other than retail and MSME.
Sir, substandard accounts, sir, 15% for outstanding only.
Outstanding only, correct.
Then how we take the security value? Outstanding.
See, for example, there is a loan sanctioned to a fellow, 100 outstanding on a particular date is 100 lakhs. Clear? Clear? Outstanding on a particular day is 100 lakhs. Okay.
Yes.
Now, let us assume that there is a security available or security not available. Let us say right from beginning, we have not insisted for any security. So how much is the provision required? Provision required 15% of outstanding, that is 15 lakhs. Clear? Point clear?
Yes, sir.
Now, second situation is in an account where 100 lakhs is outstanding, originally security was 120 lakhs. But on the date when we are classifying the account NPA, we came to know that the security is deteriorated and available security is only 80 lakhs. Clear? Available security is only 80 lakhs. Now, in this case, what has happened? 80 lakhs is the secured portion and 20 lakhs is the unsecured portion of 100 lakhs outstanding. So, 15% of 80, that is 12 lakhs. And 25% of 20, that is 5 lakhs. As such, 17 lakhs is the provision required in this situation. Is it clear?
Yes, sir. Yes.
There are two different situations. Okay. Now, as far as doubtful concern, as far as doubtful account concern, depending upon the DA1, DA2 and DA3, DA1, DA2, DA3, provisioning changes. It works like this: 25%, 40%, and 100%. 25% of what? 25% of secured portion, 40% of secured portion, 100% of secured portion, and as well as 100% of unsecured portion. So let us take the example, same one. 100 lakh was the loan outstanding, 80 lakhs is the security available. Now account is in DA1 category. How much is the provision required? Provision required is now DA1 category 25 lakhs plus 20 lakhs. Okay, sorry, 20 plus 20 lakhs, sorry. 25% of secured portion and 20 of unsecured. Second year, what happens? It comes into DA2 category. So now 32 lakhs plus 20 lakhs. And in a third year onwards, 80 plus 20 lakhs, 100. 100% of secured, 100% of unsecured. This is the provision. First year 40 lakhs, second year 52 lakhs, and third year 100 lakh onwards provision is required. More than, in a DA3 category, it is 100% provision required. Okay, DA1 category up to 1 year. 1 to 3 years in DA2 category. More than 3 years in a doubtful, then it is a DA3 category. Okay. Provision for real estate given 20%. I'm sorry, 20% can't be. Okay. It can't be. Okay, 2% it should be. Okay, check. It can't be 20%, my dear. Okay, don't worry. It is a standard provision, standard account provision. It will not go beyond 2%. Okay. Clear? I think we have covered almost all areas. Now, these aspects, lien, hypothecation, pledge, and mortgage, exam point of view, remember like this. Hypothecation is defined in SARFASI. Pledge is defined in Indian Contract Act. Mortgage defined in Transfer of Property Act. Assignment is also defined in Transfer of Property Act. Okay. With regard to documents, stamping, registration, I think legal aspects, all these are discussed. If you have any doubt, you ask me. Otherwise, I'll not discuss. Okay. You have any doubt, you are most welcome. I think from my side, I can generally say we have discussed wonderfully well. I'll be very happy to have your comments on my session. Yeah.
The type of mortgage
Your
is
feedback
like
on my session.
So type of mortgage is like English mortgage.
Yeah, type of mortgages are, see, there is a simple mortgage, there is a equitable mortgage, there is a mortgage by conditional sale, there is a English mortgage, and there is a usufructory mortgage. Usufructory mortgage, and last but not least is an anomalous mortgage. Okay, 6 type of mortgages are there. One is a simple mortgage. Simple mortgage is also known as registered mortgage, where a person who is mortgaging his property need to make an agreement between the creditor and himself, and in that he is transferring interest in that immovable property to the creditor to the extent of that interest passed in the property. The document is known as a mortgage deed. Person is a mortgager, bank is a mortgagee. That document is compulsorily required to be registered with Registrar of Assurances. Okay, Sub-Registrar Office, compulsorily. Okay, and such a mortgage deed also requires one attestation. Okay, this is what is a simple mortgage. Whereas equitable mortgage is, as per the definition, simply handing over the title deeds, handing over the property documents to the bank constitutes creation of equitable mortgage. So therefore, bank will make one memorandum, and that memorandum bank will send it for the purpose of notification, notifying with sub-registrar. That is a equitable mortgage. Then third is a English mortgage. English mortgage is not at all prevalent in India. When Britishers were there, they used to operate it. In that, whenever such mortgage is done, the mortgager was transferring the property in the name of mortgagee. Means by absolute sale used to happen. And there was only one option was available to mortgager, that repay money and ask mortgagee to reconvey back the title. That is the English mortgage. Okay. Then next is the mortgage by conditional sale. Means mortgage, I'm mortgaging the property with a term that if I don't repay by such and such date, this mortgage deed itself can be considered as a sale deed. That is a mortgage by conditional sale. And last, that one is a usufructory mortgage, where the mortgager handing over property to the mortgagee, and mortgagee is entitled for using the property, possession of the property, enjoyment of property till such time mortgager is not repaying back the loan taken. Once he repays back the loan, property need to be handed over. During the period, rental received or crops earned are totally being enjoyed by the mortgagee, and he will not charge interest, and that fellow will not claim the crops which are there in the mortgage land. This is what is a usufructory mortgage. Okay. Yeah. This is what are the, and the anomalous mortgage is combination of any one or more is a usufructory mortgage. Okay. Hope I have covered the most important required elements. Few of the things which are there were repetition in one and other modules. I don't think we require to spend, but if you have doubts, you are most welcome. And I'll be really happy to have your frank comments. Okay. Within 2 hours, we have covered almost 6 hours part. Almost this session normally is taken. Last time I have taken this session for almost 7.5 hours. And this 7.5 hours entire condensement, I could do it in just 2 hours, 10 minutes. Okay. Hope the things are clear. Okay. And the presentation is already with you. So you can, here are all your doubts. You can see here. This particular slide makes you clarity. Okay. Thank you so much. Wish you a wonderful luck in the exam. And there are few suggestions for exam. Now don't read anything. I have already shared.
Okay, sir, thank you.
I have already shared. Yesterday itself I have shared. I thought that you will read and you will ask only doubts. Anyway, my good lucks to you. And I look forward to you all for CIB session. And I believe that my session was really a help to you. Please don't pressurize on your brain tonight. You be calm, be quiet, be confident. Now go to bed. Whatever remembered by you, remembered, not remembered, not remembered. Don't at all take any tension. Tomorrow morning also, don't open any book. Try to be very calm, comfortable, be confident. You had a full ammunition with you. Don't worry. Be calm, be quiet, and appear for exam. I'm sure you are going to score wonderful marks in the exam. Good luck to you all. Bye. Percentage of transfer reserves.
Sir, one doubt,
okay. Percentage of transfer reserve as per Banking Regulation Act is 20%, whereas Reserve Bank of India makes it 25%. Is it clear? As per BR Act, if it comes, your answer is 20%. As per Reserve Bank of India guidelines, it is 25%. Any other doubt? Policy rates, yesterday I have shown you. Policy rates, yesterday I have shown you. They are available in the slide. Go there. Okay. Yeah.
Sir, related to mortgage. Hello.
Yeah, tell me, what is that?
Sir, why we are not doing that English mortgage, sir? I mean, if you are doing English mortgage,
because see, the Britishers were not believing the Indians. Okay. Britishers were not believing the Indians. They were telling that sell the property to me and you take the money. If you pay, I will resell you. If you don't pay, already I am the owner. That was the idea of the Britishers. Is it clear? Now, in a bank, do you think it is a good thing? Because property may be of 500 crore. You may be sanctioning only 2 crore loan. Are you going to purchase back the entire 500 crore property for 2 crore loan? And why we should purchase? And now bank has got various tools available in the bank's hand. The mortgage property can be, bank possession can be taken and it can be disposed of. Okay. And bank is doing that. Vijay Mallya, 750 crore worth property bank could dispose. Bank has recovered more than 6,000 crores. Yeah. Okay. Okay. Okay, bye. Thank you. Wonderful comments, wonderful points. Okay, nice.
Thank you, sir. Thank you.
Nice,
Sir,
nice,
share
nice
PPT,
comments.
sir.
Nice. Yeah, bye.
Thank you.
Yes,
sir.
Biju. Biju.
Yeah, thank you very much, sir, for the excellent session.
Thank you, thank you.
So, today morning and evening. Also, I thankful to Jaiib sir and Vinayak sir also. So all
Thank you, one and all, and good luck to everybody.
Tomorrow, we all come out with flying colors. So we wish part of IBS.
Convey my best of lucks on behalf of all the faculty members
Yes,
in the
sir.
groups. Okay. Huh? Bye.
Thank you very much, sir, once again.
I'm closing.
Thank you very much. Good luck to all. We'll wind up the meeting and the streaming also. Thank you all once again.
Thank you, sir.
For accountancy also.